All right, hope everyone's having a nice weekend. We are Sunday, June 15th. Happy Father's Day to the fathers out there. Looking forward to this agenda. We're going to do a couple things related to gold to illustrate what we're on the precipice of here with Bitcoin and really all the markets in general, in my opinion. We're going to look at Bitcoin, then we're going to look at USDT dominance. We're going to look at NASDAQ, quick look at yields. Oil, I did an oil video on June 1st, 2 weeks ago, relevant today, then the dollar, and that's it. Reminder, I'm not a financial advisor. I do these videos for education, for my perspective. I could be right, I could be wrong. Things I talk about could go up, they could go down. Don't use this as any type of financial advice. With that, let's jump into it. So what we're seeing here in gold, and remember, I think it was 3 weeks ago, 3 weeks ago, or maybe a month ago, I don't remember, when people were talking about a top in gold, and I just said, what's not being appreciated is what came before it. Okay, we're talking about a massive reaccumulation event, basically compressed energy, right? Potential energy, that energy is then released. The expression of that, a derivative in the value denominated in the dollar of gold. And my intermediary target here up at 38.45. It looks to be where this is going. And one thing to note in this structure. One thing to note in the structure is this, and notice I'm not pulling up RSI here or looking at lagging indicators, because the most powerful indicator here, folks, again, is something that isn't appreciated enough in analysts that I watch, is what came before it, energy. Show me the indicator that can capture potential energy in what is coming into a high time frame move. That's what these structures essentially are telling you, okay? Telling me. And so let's talk about this structure, this reaccumulation structure, and this is helpful in that it's gonna make my case for what I think is coming for Bitcoin a little bit easier maybe to understand, and the velocity and the extent of the move that I'm expecting a little bit easier to understand, and the timing of what I'm expecting to occur a little bit easier to understand. Now, generally speaking, and for those of you that have been following me for a while, you know I combine Elliott wave, trend analysis, Wyckoff, in how I'm looking at things on multiple time frames. And if I'm looking at, this previous all-time high here back in November 2011, and I'm saying to myself, all right, what area? So when we're looking at, a potential A, B, C, okay? So you can have a new all-time high made in a B wave. And those are called, whether it's a running flat or an expanded flat. Typically, this is not going to exceed the 1272 extension of that move and this move, okay? So 1272. A lot of speculators, a lot of traders, a lot of algos kind of look at that area. Once that's exceeded, again, rules are broken all the time in Elliott wave and all sorts of things that everyone's looking at and algos have control over. But that being said, generally speaking, you start exceeding this meaningfully, and the thought of a B wave then languishes, and the thought of a high time frame new impulse has to emerge, okay? And so why am I talking about this? Why the heck am I talking about this? Because if I'm looking at this all-time high, okay, this area, this high time frame low, and saying what would be like the word, oh, this could be a double top, right? What's a double top? A double top is just a B wave. What's a new all-time high in a corrective move? That's what I just shared with you, a B wave, expanded flat, potential running flat. And so when you look at the where does this theory die here? It dies at let's pull it up. at the 1272 extension from high to low. And where is that on this chart? That's here. That's here. You see what's going on here? See what I'm getting at? Okay. So basically consolidating under it here for the better part of a third, okay? A third of this entire price action, right? The beginning part, the correction, reaccumulation base, uptrend, and then sign of strength, consolidating under this 1272. What happened when it broke out of this 1272? So that's this first green candle here, March 2024. What has it done? Okay, see what I'm getting at here? All right. So now let's apply this same concept to what's going on with our friend Bitcoin. Again, something that is not appreciated enough, and I've said it pretty much every other week or every week for the past 6 months, is the move that has literally taken 4.5 years, this reaccumulation event that's led up to where we are now, that's basically taken 4.5 years, in the form of basically what I just shared with you on gold, right? You have this this level, this reaccumulation event, consolidation. The consolidation here, so this handle, and these are just semantics. You don't have to have a handle. You can have a rounded bottom without a handle. The handle could be, part of the rounded bottom, and you can't see it, right? And so these are all just semantics. These are ways to describe reaccumulation events. And the point being is on the gold chart, you had a major consolidation event that lasted a long time in the final stages prior to the real expansive phase starting around the 1272, right below it and around it. Okay. Well, let's see what's going on with Bitcoin. Previous all-time high to low. Let's pull it up. Look at what we have here. Look at what we have here. That 1272 extension sits at right around 103,727. And so what have we been doing? So in essence, we've been consolidating, same concept, right? This entire consolidation period, which started, mind you, back in March of last year, March 2024. We exceeded the previous all-time high, came back below it, okay? This entire phase that I'm looking at here is still the consolidative phase below the 1272, where the market might have some excuses to say, well, maybe this is some type of B wave. Okay, it happened here. We had a B wave here, B wave all-time high deviation. Oh, here we go is another. We hear this every day. The double top or the move's almost over. So we see that manifested here with the fibs as well. Is what I'm trying to get at. Very similar to what we saw here with gold. Okay, that's the whole point of this video. And so, in my opinion is that the next power candle out of this 1272 is, and I've been saying it for months now, is going to send us to 180 to 200K faster than people think. And so that's the analysis here. I still don't think we're seeing material lows. I think the local lows are in. But I did a members video where I could see us kind of double bottom, maybe a sweep of that 101, 100. It'd be really hard pressed to convince me that that's going to go down with all this bad news that came out Friday. It's not in my nature to say, now we've got a headline that's going to help us drive price lower. And so it most certainly can, but I really don't see us challenging this 30-week. I went into spacing this weekend, a lot of the members' videos and how important that is and not appreciated by analysts as it should be. And so that tells me, again, 98, 99, maybe, I don't know, maybe lows are in. I don't know. We're going to find out. I wouldn't be surprised if this market takes off next week. That is my base case here. USDT DOM supports my base case. The technical support what I'm my analysis. This isn't blind analysis. This isn't a hope strategy. This is saying to ourselves, I've got USDT, so Tether dominance, and we followed this chart, and I'm not going to go through the labeling and how I have it labeled as a redistribution. I did that in a previous video. The point to this analysis, what I'm sharing with you here is in the last, let's see, 2023. In the last 2 years, we've had a conversion line cross under the baseline. Okay, so this blue cross under the red, and it might be hard to see depending on what you're looking at. So blue, red, blue, red. And what's going on right now? We have a blue trying to cross the red. What did that, what was the timing of that in 2023? October 23rd, October 23rd, 2023. Where was Bitcoin then? Let's just do this really quick. October 23rd. Oh, interesting. It was right here. Okay. See that circle? Is that hard to see? What came next on Bitcoin? Cool. I'm sure that's the only time that's happened. There was that correlation, right? Let's look at it again. That next cross was November 4th, 2024. All right, let's go. November 4th, 2024. Let's find this in the chart. Fun little exercise. I'm sure nothing, right? I'm sure there's nothing here. November 4th. Okay, November 4th. Ooh, wait a minute. Okay. What happened after that? 1, 2, 3, 4, 5, 6, 7, 8, 8 weeks straight. What was the move from November 4th? 61%. What was the move from October? 176%. Okay. You see what I'm getting at here, folks? This is not a time to be bearish. Remember this bearish candle back here? I did this video. You can go pull it up because my videos here never get deleted. And I did this video the week of Monday, October 28th, or Sunday. We were going into the close because it's a weekend market update. Whatever that Sunday was, when we had this bearish inverted hammer, okay? And I said I did not expect us to get to the 30-week. We have coming out of an uptrend. Every trader is going to say this is bearish. All the analysts on X were saying it was bearish. That's the worst weekly close. And what did we do? The opposite of what speculators and traders thought we were going to do. That's my point. Next, NASDAQ. All right. So yeah. So yeah, we have to go down next week, right? We have to go down because we have this news, and that's how it works. Uncertainty, war, all this, and so it's the easiest short to just say we have to at least come back down and before we go up. I suppose that's a possibility. It's just not a possibility I am forecasting. Yeah, we could go down a couple points, but as I've said before, and I've said since we reclaimed this 30-week moving average, I do not expect it to be tested. I do not expect this cloud to be tested. I expect volatility along the way, absolutely. But from here, we're talking about a 4% drop to test the 30-week moving average. Not happening. Not happening. I'm sorry. That's not a fact. That's me just saying. That's speculating. I don't know that that's not going to happen, but I'm saying it's not going to happen. Maybe a couple points, percentage and a half, 2%. This thing screams continuation. This screams V-shaped recovery, and the dips are not going to be what people are expecting, in my opinion. Yields, really no great update on yields, right? There's just where this is just a sign of weakness, continues to be a sign of weakness. Now we close under the 30-week moving average. We're now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks since this power B wave counter trend rally consolidating around the 30. This is distribution all day long. Failure to make a new high. It's just a matter of time. Price is going to be running into this cloud if we continue to go straight. My analysis tells me we're going down. We're going down hard on yields, just a matter of when. All right, so why am I bringing oil back up? Well, a lot of relevant events on Thursday and Friday, and now we're breaking out into a new oil bull market, right? Hmm, I don't think so. In the video I posted on June 1st, I talked about at sign of weaknesses and markdown phases, you have to expect a lot of shenanigans, okay? This is a big deal. There's a lot of money on the line here. There's a lot of implications. Um, I'm not going to get into the tinfoil stuff on all of that. What I'm getting at is expect shenanigans. I said expect to check back to the underside of this. This went more than the underside, folks. This closed back in the bottom end of the range. This closed into the cloud. You had a wick above the cloud, but a rejection. What does that mean to me? This means to me nothing. This means to me nothing until, like I said in that video, it proves it's a reversal. This right now is nothing other than a lower high, or excuse me, yeah, lower high, lower high, lower high, lower high, lower low. And so and we reclaim the 30 week, by the way, as well. If the 30 week starts doing that, price starts to consolidate here and then reclaim the cloud, uh, then we can talk. Then we can talk. Maybe that markdown was a truncated markdown on oil. I don't believe so. I don't believe so. I think the analysis here continues to be, this is what's going to happen with oil. Markdown is next. We'll continue to monitor that and take it from there. The dollar, the dollar looks to be again uh, unclear when this is going to happen. I'm probably looking at a rally in the dollar, to be honest with you, in the short term, only because this structure, I've seen these structures before, and we've been consolidating under this, and the market for such an important asset or class like Dixie, I don't know what you consider that, since it's a measurement against a basket of other currencies, whatever. That's semantics. I wouldn't be surprised to see one, two, three, one more move. I keep saying I'm expecting another check back here. We got one check back, two check back prior to the real plunge in the dollar. And so wouldn't be surprised. I don't think risk assets, uh, I think risk assets go up if the dollar goes up here. That's what I'm thinking. And when I'm saying goes up, I'm looking at maybe a move back to 100, 101, something like that prior to the markdown, or maybe it just starts marking down. Who knows? Folks, that's it for the video. Hope you have a great rest of your weekend. Take care. We'll do some more videos, post-market updates a few times this week for the members.